Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guest today is Tim Rotolo, founder and CEO of Range Fund Holdings. We're talking about investing in nuclear renaissance, which is driven mainly by AI boom. And Range offers a nuclear renaissance ETF. It is the NUKZ ETF, NUKZ. And this ETF was among the best performing ETFs of 2024. And it continues to surge this year as well. It is up a little more than 34% year to date. So very impressive performance. We'll talk about nuclear energy and we'll talk about this ETF. So, Tim, welcome to the show. Great to have you with us today.
Yeah, thank you so much for having me and highlighting this very important theme.
So let's start with President Trump's new executive orders on nuclear power. These were issued last month, and these outline a sweeping agenda to quadruple U.S. nuclear capacity by 2050 and also to prioritize American leadership in nuclear technology globally. So could you please highlight some of the key initiatives which are mentioned in this order? So it appears that this news marks another major tailwind for this sector.
Yeah, it's been... honestly, the news flow in the space has been fast and furious, and it seems like every morning I wake up, there's another announcement. But I would even just go back, and I would say even before these executive orders, nuclear power, despite the headlines, has been a bipartisan issue probably since like 2018, 2019. But President Trump has been very supportive since his first administration. Obviously, this has been a dramatic acceleration with the focus on AI and power generation. But what you've seen, I think, emerge is, incredible bipartisan support, but more importantly, I think intense pressure and lobbying efforts on behalf of the private sector, which are really pushing to speed up the deployment of nuclear power. And that's always been one of the challenges, at least in the United States. If you look at somewhere like China, they're aggressively deploying new nuclear power. And I think when we looked at it, or the government looked at it, and they said, if we want to win the AI race, as Jensen Huang said, the rate limiter is power. And nuclear power represents a really unique source of baseload carbon-free power. And so what you've seen with these executive orders is really trying to address some of the significant bottlenecks around licensing and permitting. So trying to push the NRC, the Nuclear Regulatory Commission, to make faster licensing decisions for new reactors, but also extensions. So the extension piece is something that's often missed. And that was something that was highly supported by the IRA with these nuclear tax credits. And so, continuing to build on the progress of the IRA is very important. Opening up testing potential. So new reactors obviously need to be tested. The Department of Energy has been incredibly supportive of this, but continuing to open up federal land so that can happen. Using military bases in order to bring on experimental reactors more quickly is another significant regulatory unlock. Supporting the nuclear fuel cycle has been a significant focus. So, one of the most bipartisan issues for the past several years has basically been sanctioning Russia and trying to limit the ability of the Russian government to import, or I guess export, uranium and enriched uranium to our country, and that's really just to ensure that we're not in the same position that Europe was with natural gas. So really trying to nationalize our, and I don't mean in the sense of the negative connotation of nationalizing, but supporting our domestic fuel cycle has been a significant a significant focus of not only the Biden administration, but most recently the Trump administration, and also trying to develop the rest of the supply chain that will be needed for small modular reactors, in particular this new fuel type called high assay low enriched uranium. And so actually just last week we saw some announcements around the Department of Energy making orders to several companies, some of which are in our index. So those are kind of the primary aspects of the executive order. But again, I think this executive order, the set of executive orders, is really building on a foundation that was set in motion several years ago. And I think these are just these are kind of like the private sectors stepping in and really trying to help the government identify where the ultimate bottlenecks will be, and how we can accelerate as much new nuclear as possible, both not necessarily just on the SMR or small modular reactor side, but also in the deployment of large reactors. And we saw an announcement from the government talking about wanting to build 10 new reactors, large reactors immediately, and Westinghouse, which is owned by Cameco and Brookfield, stepping up and announcing that they wanted to vie for that contract.
So you mentioned AI's power needs, you mentioned SMRs, you mentioned supply chains. So we'll talk about all of them. Let's start with AI's power need. And so we all know that this renewed interest in nuclear energy is largely driven by big tech's recent push into this sector, because they are building all these AI data centers that require massive amounts of energy. And because of their climate pledges, they need clean energy. And nuclear power is one of the cleanest form of energy. So we have seen that companies like Microsoft, Google, Amazon, Meta, they are all investing heavily in nuclear power projects, including SMR developments, revitalization of many existing nuclear power plants. They are also entering into long-term agreements to buy nuclear power. So could you highlight some of the major developments in this area, in the move towards nuclear power by big tech companies?
Yeah, and I would say I somewhat disagree with that assertion that this is all about AI. Like this is about energy security at the end of the day, because I think what was learned by the Germans and the Europeans was that you cannot have a single source of power be it can't stop your economy, which is basically what happened when Russia invaded Ukraine and they shut off access to natural gas and the wind stopped blowing. So I think the resurgence in nuclear power has been building for the last 5 years. Yes, the big tech gets all the headlines, but this was an emerging theme well before. And it's because the realization that wind and solar alone cannot allow us to decarbonize our economy. So if the objective, right, if we just go back and think about kind of like the foundational objective of these clean energy pledges, it was about decarbonization. And nuclear power was, really viewed negatively until people realized, well, the nuclear power kept running and provided baseload power through, the war in Ukraine, the Texas freeze. It kept France running. And while the Germans decided to go and build all this solar and wind, their electricity prices doubled and their emissions didn't go down. So what was the point? And they'd shut down all their nuclear power. So I think there was a return to rationality, and AI has accelerated that trend dramatically. So what has transpired? So we've seen Amazon partner with Talon and do a behind the meter deal. So basically building a data center directly connected to a nuclear power plant. And Microsoft announced a deal with Constellation to restart 3 Mile Island and has entered into a long-term power agreement. Now, this is actually one of the big things that has been missing is it's difficult for a utility like Constellation to consider building or even restarting a project like 3 Mile Island without the guarantee of the revenue, right? And so the ability to enter into a long-term power purchase agreement provides access to financing to do this work. So that is where, having a $3 trillion market cap company sign a contract with you becomes incredibly valuable. Amazon has also been active in terms of investing in X Energy. We've seen Google most recently sign a contract with a group called Elemental to help develop 3, I believe, 600 megawatt power nuclear power plants. Just yesterday, we saw this deal with Palantir and the nuclear company. They announced a $100 million deal to build a new software platform to streamline construction of nuclear power plants. That is like a whole nother level in terms of the type of innovation and talent that's being brought to the nuclear space as a result of big tech being involved. Meta has also signed long-term power purchase agreements. So all of these big tech companies see the opportunity that nuclear presents to provide them with highly efficient baseload power, and as you said, to meet their climate pledges. But I guess our assertion is that this is a much bigger trend than just big tech, and we want there to be a broader fundamental underpinning than just these large scale tech companies needing this power. If you, again, just going back to China, like China has been developing 10 reactors a year for quite some time. It's just that most people don't pay attention to that type of development. But the growth profile and why we launched this index. So we had originally had a uranium index that was the underlying index for URNM, which we sold to Sprott Asset Management. That thesis was about there being a supply deficit in uranium, and it didn't require any demand, and really demand for uranium from nuclear power plants was quite low at the time. It was low single digits maybe, and now that's accelerated where it's kind of 3, 4, 5% annual demand, and that's what got us excited. Plus all the developments of these SMRs, the support by the Department of Energy for these SMRs. That's what got us interested in developing this new index to provide exposure to the broader ecosystem of nuclear power. And not just advanced reactors, but the utilities, the construction companies that will ultimately build these, the companies that will fuel them, et cetera.
So you mentioned uranium. So let's talk a little bit more about current supply and demand dynamics, because uranium is needed for these nuclear power plants. They need a lot of uranium. So the demand for uranium continues to rise, but supply faces many challenges, and expanding the supply is not easy. Expanding the mining capacity takes a long time. And additionally, Russia and its allies, they control more than 55% of the global uranium mine supply. And Russia accounts for about 45% of the global market for uranium conversion and enrichment. That is according to a Bloomberg report. So tell us about your thoughts on current supply and demand situation for uranium.
It's very precarious. So we intentionally did not want a lot of exposure to uranium in this fund. We feel like that's a different thesis, but I think that the core issue. So I guess there's two ways of looking at it. From the nuclear utilities perspective, uranium and nuclear fuel, like, so from the fuel cycle of uranium, enrichment, conversion, fuel fabrication, that's about 15% of their operating cost. The reality is utilities are going to pay whatever they have to for uranium, right? So the supply demand as it relates to nuclear power is, I don't want to say it's not relevant, but it's less relevant than if you're an investor directly in uranium miners or physical uranium. But you outlined it quite well, right? This is so the market has been so beaten down. Now it's rebounded in the last few years, but the price of uranium after Fukushima fell dramatically, and that basically reduce the capital available to these companies and the incentive to go develop new mines. And now, as the supply demand, our view is there's a very large supply deficit. The price still has not signaled, is not at a high enough price to signal these companies to turn new mines on. And even if, there are some brownfield mines that could be restarted. Cameco has some projects that could probably be restarted or ramped up. But again, they're not seeing high enough prices to incentivize them to do that. And it's just, again, it's a different thesis, but the uranium price is in a very fragile position, right? Utilities have undercontracted for quite some time. And so at some point, they will need to return to the market in a meaningful way. And because of things like sanctions against Russia, the market has bifurcated where the Chinese are basically buying all of the Russian and Kazakh uranium, and the Western utilities, have a dramatically smaller pool of uranium to choose from at this stage. So it does put the utilities in a bit of a precarious position. They will pay what they need to. We think uranium is also a very attractive investment opportunity, but have not, don't, unlike some of our peers with, kind of nuclear power and uranium products, we attempted to have more of a pure play nuclear power ecosystem product and index.
So we all know that building nuclear power plants is very expensive and time consuming. So that's why there's a lot of interest in these small modular reactors, also known as SMRs. So these are typically manufactured in factories, which reduces construction time and lowers financing costs. So proponents talk about the advantages of SMRs, but there are still many concerns. There are concerns about safety, cost as well. And my understanding is currently only one or two or just a handful of SMRs are in commercial operation. So what are your thoughts on SMRs, particularly as many big tech companies are also investing in these SMRs? But the key question is, when will we start seeing them more widely adopted?
So there's several technologies that are being advanced. So let me just address your first comment just about expense and time. That, I think, is one of the primary things that the government is trying to address right now. The price and the time is really a function of the regulatory framework in the United States and Western economies. The Chinese and the Russians are very, very good at building these things in much shorter time frames and on budget. So the large reactors, as I said, there's this announcement to build 10 large reactors, and Westinghouse is going to work on that. So I think we can address the need for SMRs first by trying to be better at building large scale reactors, right? Because it is quite efficient, like just to power the grid with a 1 gigawatt reactor than trying to build 3 or 5 small modular reactors. But where I think the SMR space gets very interesting, and again, I don't have a particular view on which technology wins. I think it's just too early to tell, which is just another, another reason to have a diversified, indexed exposure. But the types of micro and small modular reactors that can be deployed into a more diverse setting, next to a steel plant, next to a chemical plant. You've seen Dow Chemical get very involved in this space because I think they recognize that one of their primary input costs is power. And so to the extent that they can control that and have clean baseload power that's potentially less expensive than what they're paying for now, it's quite valuable to them. So I think there's still a number of technical challenges for the SMR space to overcome. I think what you'll see is basically large reactors getting built, and then small and micro reactors having kind of a very specific use case, as opposed to us trying to build a whole bunch of SMRs to replace 1 gigawatt reactors. So I think the ecosystem will expand. The other piece about the SMR space is we really need to see a significant adoption, and that doesn't mean immediate deployment, but we need to see a large scale order from either a utility or a government that allows the supply chain to be developed, because that's one of the missing components. And I think it's one of the things that is being addressed as well. Having Amazon and groups like that looking at the SMR space is very helpful, because again, they just have very low cost of capital and very large balance sheets that will allow the supply chain to develop. And once we get a more efficient supply chain, that's one of the things that the Chinese have done well. When you're building 10 reactors, you have not only the people and the know-how, but you have the supply chain that's efficient, that allows you to just have those economies of scale. And so the SMR space needs that. And I think, because we've only really built 2 reactors in the United States in the last 20 years, we need to see a significant development of intellectual capital, as well as just the basic supply chain. So that's another huge benefit of deep-pocketed investors and government support coming in behind the nuclear space.
So let's talk a little bit about nuclear fusion now. And nuclear fusion is often called the holy grail of energy, because it promises a virtually limitless, clean and safe source of power. This is basically replicating the energy generating process of the sun and earth. And we have seen that companies are investing billions, particularly big tech companies and billionaires. They are investing billions in nuclear fusion projects, but no one has made fusion power viable yet. Do you think we will see nuclear fusion become viable in our lifetimes?
I have no idea. I think it's great that you have a bunch of people like Jeff Bezos investing heavily in the space, right? If there's a great interview with Jeff Bezos where he talks about, how he always wanted to go to space, like as young as a kid he was, and he felt like it was his social responsibility as someone who had been successful. So he's selling his stock, and basically all of the proceeds of his stock are going into Blue Origin and trying to advance humanity in things like fusion and space travel, and the development of space manufacturing. So I don't have a strong view. My guess is between quantum computing, advances in material science, Does it happen in our lifetime? Probably. But I don't know if that's like the next decade or the next, or it takes 50 years. But I think at the end of the day, the focus of the tremendous wealth of these technology innovators on solving these huge problems makes it probably more likely than I'm giving it credit for. It's I don't know if Elon Musk, but like to me, Elon, that's like a great problem for him to work on. And maybe he'll get there eventually. But I guess my one counterpoint to everything I've just said is at times I find it frustrating that we are spending so much money on these kind of like pie in the sky ideas when there are viable solutions that we could be deploying the same amount of capital into and seeing immediate results. So again, that's just like a difference of opinion that I think I have with venture capital, where it's like, why are we funding these moonshots when we should be building the supply chain for SMRs and large scale reactors? But it would be incredible if we could get that done. But then it gets, I was talking to someone about this earlier today, even if you get fusion developed, the deployment of fusion, again, I don't know enough about how the commercialization would work and whether or not there's an immediate way to deploy it. But you have 450 reactors globally using uranium, and you just have so much infrastructure that's been developed for fossil fuels and nuclear power and solar and wind. Introducing a new power source, like even if we solve the net power production issue, I can't actually envision how the deployment would work in a reasonable time frame. So that's why I often think like, bird in the hand, and that's nuclear right now, is better than two in the bush. So
let's talk about your ETF now, the NUKZ ETF. Tell us a little bit about its strategy and some of its top holdings.
Sure. So we built the index for the product. It's the same thing that we did when we launched with uranium and URNM. The index was URNMX, and so we built NUKZ, which is the underlying index for the ETF. Really with the kind of two goals in mind. One was provide the best cross-section of the global nuclear power ecosystem, but then also try and develop a methodology which allows people to participate in as much pure play stock exposure as they can, and then probably tilt that towards the smaller cap growth part of the market. And so if you just think about, so we're starting with a universe of stocks. For each one of those stocks, we're basically assigning it kind of two different tags. One is first within the four buckets that the index looks at, which is utilities, advanced fuel, advanced reactors, and construction and services. And then we further refine the list by saying or assigning the stock a particular category. So either diversified, pure play, or pre-revenue. And then once that is run through the methodology, that will weight the securities. So we cap all the positions at 10%, but the diversified, non-pure play stocks are capped at 3%. We have a minimum position size of 1%. And so again, the goal is to have the pure plays be larger, and also not have mega caps be the entirety of the index. We want people to have exposure to the smaller cap stocks that have the potential to really outperform. The index is rebalanced on a semi-annual basis, and so when you start to look through the index, on the advanced fuel side, We have Cameco. So again, Cameco is kind of a unique situation in that I could call it, a service provider because of its ownership of Westinghouse, but it's also in the fuel bucket because of its involvement in uranium mining, but also conversion. Then the second biggest holding is Constellation Energy, which was the spinoff of Exelon. It's their pure play nuclear utility. And then kind of below that, it gets fairly diversified, but we have in the advanced reactor side, NuScale and Oklo. We also have GE Vernova, which is the developer of their nuclear power. And then we have on the fuel side, we have companies like Centrus, which is doing enrichment, Lightbridge, which has an advanced fuel concept. And then kind of as you work your way down, in the construction and services, we have a number of conglomerates from Korea and Japan, companies like Fluor. Fluor also happens to own a significant portion of NuScale. So it's a fairly diversified portfolio. The biggest positions are about 10%. The top 5 holdings are about 30%. So it is somewhat concentrated at the top, but it's global. And, we think it's a very attractive kind of one quick solution to get exposure to the space. And thankfully it's performed quite well. The performance of 24, I think, was one of the leading factors that led it to be named the thematic ETF of the year. It was nominated for it was nominated for ETF of the year. Unfortunately, our competitors were the BlackRock Bitcoin ETF and the Vanguard S&P 500 ETF, which hit a all-time record in terms of AUM. So tough competition out there for that one. But yeah, it's kind of done exactly what we would have hoped from a performance perspective. And I think what differentiates us besides just the self-indexing is that because we spend so much time in the sector and we have very few products, we know the space very well. We know the new names that are coming into the industry. We know what's happening, when there's spin-offs. And so we can really try and maintain that pure play exposure as the industry evolves and try and be a step ahead. And again, just kind of continually update the holdings to be best reflective of the direction of the industry.
Yeah, good stuff. Congratulations on the excellent performance. We'll have to leave it there, but thank you so much for joining us today and for sharing your insights.
Yeah, thank you.
That was Tim Rotolo of Range ETFs, and the ETF that he spotlighted is the Range Nuclear Renaissance ETF. NUKZ, NUKZ is the ticker symbol. And other ETFs that you could consider are this one by VanEck Uranium and Nuclear Energy ETF. The ticker symbol is NLR, and this provides comprehensive exposure, including utilities, miners, and service providers. And a newer ETF in this space is by Themes. It's the Themes Uranium and Nuclear ETF, ticker symbol URAN. This invests in uranium mining companies as well as nuclear energy equipment and technology companies. If you want to focus more on miners, Sprott offers a pure play uranium ETF that focuses exclusively on uranium miners and physical uranium. The ticker symbol is URNM, and we have had Sprott on the show earlier, and we have discussed this ETF in detail. And another ETF that you could consider is by GlobalX Uranium ETF, ticker symbol is URA. And this provides exposure to companies which are involved in uranium mining and production of nuclear components. And I'm looking at the performance of all these ETFs, the year-to-date performance. And GlobalX product is the top performer year-to-date. It's up about 38%. The one by Range that we discussed, NUKZ, is up a little more than 34% year-to-date. The VanEck product is up about 31%. Themes ETF is up about 26%, and the Sprott Fund is up about 11% year to date. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.